What's going on, guys? Welcome back to the channel. It's your boy DXB Crypto. If you're new to the channel, subscribe, like, share the video if you're a returning legend. You know what to do. These are monumental times, so it takes a lot of research bringing these videos to you. But two things. One, Trump China. So those of you in our VIP Discord and several videos I actually made here will remember that I said the moment Trump and Xi meet, they will announce the end of the tariffs against each other. Now there is an official pause. I really don't think Xi got the joke, but this is hilarious. Check this out.
Great pleasure to see you again.
Good to see you again.
Me too.
And we're going to have a very successful meeting, I have no doubt.
He's not laughing, fam. He don't get it. He doesn't get it. Anyway, let's get straight on to what's going to do in the rounds. Now, we know, of course, unemployment, and it's not to do with only AI, but that is the Fed mandates or the dual mandate, inflation and unemployment. And I'd like to remind you, last night, we actually got more than what we bargained for. We had the official announcement from the Fed for the end of the QT period. Of course, that is huge. Now, let me show you something.
We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more.
Let me dig into that, lady, before you do. Now, one of the reasons why he said we definitely are not there yet is, first of all, people are misinterpreting the fact that the Fed, it said very clearly, when they announced the cuts last month, they said we are going month by month. Okay. Number two, the issue was the journalist said, how certain are you that December rates will be cut? Are you confident? I mean, with that line of questioning, no wonder the man distanced himself from that folly. And he quite clearly and specifically answered, well, to be honest with you, we're definitely not in agreement. We haven't absolutely confirmed anything for that. Facts. I agree with Powell. The Fed is divided, guys. If you look at the 12-man vote, or women, or 12 people that are on the board, 10 of them have agreed unanimously for 25. Stephen Moran came up with a 50 basis points, and I believe one of the governors from Kansas said no change, right? Very hawkish. But I think he was relatively dovish, even though some of the things that he said put the kind of dampers a little bit, right? It means not just now. And you can see the way the market reacted, but these guys are shitting themselves. I mean, there's tons of, the labor market is an absolute disaster. Maybe the next COVID-19
about what sort of argument
type of unemployment levels will be absolutely triggered by AI, right? Amazon, thousands and thousands, tens of thousands of people being laid off from many different companies right now. So let's hear what he had to say about this.
were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So
the one tool is to print money.
You have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other, and they also have different levels of risk aversion. And you know, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that it's a fact that we don't make decisions in advance. But this is, I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Exactly. Now, there is a deep rift within the Fed, and that is obvious. And that's what he was saying. But we are going to get the end of QT. So I think eventually they will have another rate cut. They have no choice. Like he said, we have one tool. Inflation's going up. Employment market is imploding. And we only have one tool to fix it. So it looks like the Fed will do what the Fed does. And this is obviously going to be quite controversial for people because they don't know how long to wait for, what the cycle is going to do. And of course, the government shut down and all of these different things. But what we said last night was just to talk about this a little bit more. What I do is I forecast and then I try to align what the Fed has said. Okay. So this is what we're going to go through this quite quickly. Okay. And the key highlights were, I wasn't even thinking about to be honest, whether he was, these cuts, these were formalities. Doesn't really matter here. But anything else after that, the big surprise for me was the tone, of course, slightly hawkish, creating knee-jerk volatility. Fed statement, inflation has moved up since earlier this year and remains somewhat elevated, had a huge red candle. And these were all of the different permutations that we saw. End of QT, he admitted as much, right? And this is because of the overnight lending markets. There's no liquidity in the system. And of course, quantitative easing needs a transitioning step overall before they can expand the balance sheet. This is why I think the cycle will be longer, guys. Let's get to the point here. And short term, what's happening is the market makers, those people that we absolutely know can send the market either way, are obviously going to have a field day. These things don't work out themselves. Strong macro tailwind for Bitcoin and risk assets. And this is to do with the dollar. And of course, it's going to be the dollar cycle now. So long term, we're entering the phase of new liquidity cycles, slower than 2021, but more sustainable. I think it'll be more explosive and more sustainable over the next kind of 6 months even. I'm not looking as far as 12 months from here. And the price of Bitcoin continues to go only in one direction for now, which is it must grab liquidity to the downside. Market makers will make the most of this. But if we continue to look at this in the short term, things are not looking great. In the long term, things I think will get better. And not only would they get better, but what happens is once they create the money and start shifting that money, that's going to be the time when we look at this as the possibly one of the greatest, for me, cycles in terms of where assets are at the moment. And you look back at during crises like 2008 or the COVID pandemic, the Fed actually launched QE straight away. They created digital money out of thin air, buy trillions of dollars of government bonds, really, and other assets from the market. And that obviously had a huge amount of cash into the financial system to keep the economy afloat. Okay. So right now, prices are not doing great, guys. Prices are not doing great. Of course, BTC, you can see here, sell the news event. And this is absolutely the daily candle that we're seeing right now. The market has fallen back to this support line, which is quite significant, actually. Breaking below this, then the next target will be these liquidity areas that we see here. So this is a great time. Look, all the top assets. Look at Ethereum here, right? Ethereum coming down here, obviously coming back to this 50% level. You've got SUI here. What's SUI doing? The market is aggressively short right now. Aggressively short. So could we actually see a dream scenario where this actually even acts as a mini bear market for many of these cryptocurrencies? And I say dream scenario because anything that you hold will absolutely go nuts. Anything that you buy here, because prices are pretty low, we're only looking at these wicks to the downside, right? This is crazy level for many of these assets. This is 50 cent SUI network. I'm not saying you're going to get 50 cent SUI network, guys. Don't jump at this, but you should really be indifferent at this point if you're still holding your coins, that the market's going to do what the market does. Of course, we have to have realistic prices where things can go and where we could actually even pick up more quality assets over the long term. Okay. And just to show you, look, Bitensa Tau is still holding above $400. So this is a great time to be interested in the market, in my opinion. Short-term bearish, long-term bullish. Now, the what do you call it? Once the economy was heating up and inflation hit, the Fed needed to reverse the course. That is definitely what quantitative tightening means. And you may have to remember, at the moment, we have a situation where inflation is relatively high, not too high, but Fed is also doing quantitative easing and ending QT. So it is a big, peculiar time, guys. And instead of buying bonds, of course, Fed lets the bonds mature and doesn't reinvest all that money. Think of us slowly letting the air out of a balloon to reduce the money in circulation in the economy, which helps cool down inflation. But right now, we're going to start ending that pretty soon. Okay, so when the Fed says it will end QT, it means that it's going to stop shrinking their balances, and of course, they will be no longer actively draining the cash system or cash from the system, and of course, they're going to put the cork back in the bottle, guys. Okay, so in the long run, what happens is the Fed is obviously, once they pivot, guys, they are not going to do liquidity drain. Financial system will keep the cash it has and they will inject more. And of course, generally it's seen as very supportive for stock market and bonds, and less upward pressure, downward pressure for everything else. So this is a rebalancing act. Make no mistake about it. And he's trying to avoid, of course, causing a recession while keeping inflation in check. Ending QT is way to gently ease those brakes, guys. So, you know, if you start seeing these headlines, you know, never forget where we're going in 12 months time, 6 months time, 5 months time. But officially for me, I think it's time to double down, buy any significant dips in the long term. You know, these assets could be around here, but next month we could change the market. You'll see, I look at Casper here, right? Everything is crashing down right now. What a great time to have some, liquid cash on the sides. And overall, I do believe the cycle will officially get longer. Okay, this is an urgent video, and I've just given you my 2 cents of what's happening in the market. Again, going back to this, DCA, December could actually present a macro breakout for Bitcoin. Next leg up for those patient who DCA, that's the weaker dollar. Weaker dollar is a liquidity tailwind for all season. All right, guys, enjoy and don't be scared. It is absolutely time to be optimistic for the first time in 4 years. Take care, guys. Smash a like.